In today's video, we're going to examine and break down Michael Saylor's strategy about how to amplify your money. So specifically, he said, if you want to 10x your money, buy Bitcoin. You want to 100x your money, buy Bitcoin with someone else's money. And if you want to 1000x your money, buy Bitcoin with someone else's money and lever it. So stay tuned.
Bitcoin is booming. Are you cashing in or missing out? At Drip2 BTC, we're rewriting the rules of Bitcoin investing. Earn up to 30% ROI on your deposits, unlock incredible Bitcoin discounts, and transform credit into up to 3,000% APR growth. No hassle, just real results. Don't wait, your future is one deposit away. Drip2BTC.com. Invest smart today.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. So, like I said, we're going to examine this strategy and figure out what you can do as a day-to-day wage worker. Like, how does this look if you're not a multi-millionaire and sitting on $4 billion of capital like Michael Saylor was back in 2018 or so? And what does that look like? So let's jump into that clip and then we'll break it down.
I think the best way to get superior returns, 100x type returns, if you're an individual, would be you keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think, in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be a $100 million Ferrari, right? If you look out 20 years. So you have to.
So let's look at that first principle, and that's exactly what I shared in the previous video about the 5 laws of gold, where you want to first and foremost ensure that you are paying yourself first, or that you are spending less than you earn so that you can actually afford to buy Bitcoin. So if you don't have the income or the money on the side to be able to buy it, you either gotta cut your expenses or find a side hustle or something to where you can get at least 10% of your monthly salary. And again, for the wage worker, if that means, you know, out here, like I said, in Southeast Asia, let's just say you're making a decent amount of income, so you're $1,000 a month. Well, that means you want to be able to find $100 a month that you can buy Bitcoin with. And at today's prices, that will get you 0.001 Bitcoin, roughly. It's like 103,000 right now. So 0.001 Bitcoin, that's a way to get started. And within a year, well, the price goes up, but you'd have, 10 times as much Bitcoin than what you started with. In US dollar terms, maybe not in Bitcoin price terms, but that will also depend on, the price of Bitcoin. But the point is that you have to have a way to establish a consistent opportunity to buy Bitcoin. And then, like he just said, he believes in the year 2045, Bitcoin will be 13 million a coin. Well, let's just go simple math. I would say it at least be 10x from here. So it's at least going to be $1 million within the next 5 years or so. So that means that $100 investment you made today is going to be a $1,000 investment 5 years from now. Like, that's not far-fetched to believe for Bitcoin to do a 10x from these prices. So you are saving, that is leverage, that is 10x. That's exactly what he said, because you're looking at the cost of capital and the way that the fiat currencies are constantly inflated, and how everything gets cheaper and cheaper when you evaluate that in Bitcoin. So you'll have less quote unquote dollar value in your account possibly, but you'll have more Bitcoin. And if you evaluate that against Bitcoin terms, then you'll find that your buying power has gone up, and that 10x is built into the price, because within 5 years or so, we'll be sitting at another halving and then well into another bull run. So it's not hard to see how that could definitely 10x your money. Let's go into the 100x and 1000x strategies.
Keep your job, unless you're insanely rich, don't splurge on the Ferrari, buy the 6 Bitcoin instead. And with regard to leverage, the intelligent leverage for the individual is generally long dated, mid dated mortgage debt. So if I have any kind of property, if I have a house, I would put a long mortgage on it, a 10-year mortgage or 15 or 20-year mortgage on it, especially a conforming loan, and then I would roll it into Bitcoin. Because mortgage debt is not mark to market. It's against an asset which is fairly stable. Normally the interest rates are somewhat subsidized by a Fannie Mae or a Freddie Mac program or a government program. So it's the cheapest form of permanent capital that someone can get. So,
So let's go into that 100x strategy that he's saying. And that is, again, if you are a wage worker, but you own a home, then he's saying that you can take a loan out, borrow against that asset, that home. And if you're not familiar with the term market to market, basically mark to market means adjusting the value of a loan or investment based on its current market price. So say, for example, if you borrow $10,000 to buy stocks and the stocks drop $5,000, a mark to market loan might require you to pay back part of the loan immediately due to that price deduction. However, if it's not market to market, like he said, like a loan on your house, then it's a fixed rate loan and it's for that duration, typically, like he said, long duration. So 10, 20, 30 years. And you can get it at, 5%, 2%, something to that effect. And typically Bitcoin, currently, the average ARR is around 60%. His projections is by 2045, it'll be less volatile and kind of flatline out at about 30% ARR. So either way, that will exceed the interest on that non-mark to market loan that you have if you can get a house. Now, again, this is risky. This is leverage, because let's just say black swan event happens and you have a loan on your house and Bitcoin just shits the bed. Well, that is your house. That is your safe haven place you are living. And if you have now ended up putting that at risk, that is nothing to shake a stick at. That is a huge, huge risk. But if you believe in Bitcoin and the fundamentals and where things are going, and you've kind of weighed the risk in regards to black swan events, then that could be leverage you're willing to do. And clearly Michael Saylor has put his money where his mouth is. He's put up billions of his business and his, what would you call that? Reputation on Bitcoin. So this isn't like a made up strategy or he's trying to get you to pump his bags, because clearly he's in this for the long haul with way more than the average person watching this channel or watching Natalie Brunell's content. So it is a strategy that is employed. And this also flies in the face of what definitely the way I was raised, and maybe some of you as well, is that you don't want to have any debt. Everybody's always like, get rid of your debt. Don't have any debt. But the way that the rich and wealthy has done things is exactly what he said. They're leveraging the debt. They find an intelligent way to borrow money and use that borrowed money to make a sound investment that they are secure and confident with. And then they take that capital that they made from that investment and pay back the debt. Or 9 times out of 10, they just roll it into something else. Like they never pay back the debt. They just keep getting loans out against it because that capital, that asset, whatever they bought, continues to appreciate more than that debt. So it is, again, a strategy that has been invoked by the rich and wealthy. So it's not like he's sharing stuff that makes absolutely no sense, but it may be foreign to us that have not been privy to these kind of fundamental ideas. But if you don't have a home, you could get a kind of a personal loan. And this is only available typically to countries that allow for, ease of debt-based loans and things of that nature. So I know like out here in Southeast Asia, Thailand and Cambodia specifically, it is rather difficult to get a loan. And they only give you a certain amount based off of whatever your job is and income. And that has to be verified and all that stuff. But either way, if that is available, typically loans are going to be your second best versus a house, and it is non-mark to market, because typically it will be a fixed rate. Now, depending on where you live, it could be higher rates than this. And if it's too high, then definitely that is something you wouldn't want to do, because remember, you're borrowing against this. And if you are a wage worker, that means you don't have the money to pay the interest on this typically. So that means you're gonna have to save money anyway. And depending on what the interest rate is, it may not be enough to cover the price appreciation you see in Bitcoin, because you could, if you do this, say in a downturn of Bitcoin, you could not catch any of these insane returns, and you could instead just be catching the bear market. So it's a huge risk, but it is available because that $1,000 a month you're earning, that $100 that you were saving, now you can continue to save that, and now you're taking this loan instead and buying Bitcoin with that borrowed money. So, but you still have to pay that loan. With these types of loans, you got to pay that loan each month. So again, it is risky. So I'm not saying by any means do these things. I have employed these strategies personally already, but it is not for the faint at heart, and you do have to have some sound money management kind of foundation.
I give you what you shouldn't do. You shouldn't quit your job. You shouldn't splurge on sports cars you can't afford. Don't buy a yacht because it's obscenely expensive, and don't pay off your mortgage. Don't get debt free. Any capital you have that's not marked to market capital would be better invested in an asset that's going up 30% a year for the next 20 years.
I've met so many people.
So the next option that he didn't really go over in detail, but is the 1000X, where you borrow and then you lever it. So in order to lever it, because now if you're borrowing and buying Bitcoin. Now you have to be able to get more money from that Bitcoin to quote unquote lever it. Now remember, this is extremely risky, very risky, and Bitcoin is volatile, so you could lose it all. But one of the ways to lever it, which I showed you guys on my channel, is you will take that Bitcoin that you bought. So let's just use simple math. Let's say you were able to get $1,000 worth of Bitcoin. That $1,000 worth of Bitcoin that you bought, that roughly 0.01 BTC, you would then put over here into Ledden, for example, or Morpho on Coinbase. I think Ledden has a better track record. Testing out Morpho right now. But you bring that $1,000 worth of Bitcoin into Ledden, they would then give you $500 back. You would have cash. With that 500, you take that 500 USDC, well, they would actually give you cash in your bank account, depending on what country you live in and what state. You would buy Bitcoin with it. And then now you would have 0.015 BTC, because you would take that 500 or that you have, and you would add that to Ledden as another loan, and then you'll be able to get $250 back. Because remember, you always can get 50% of your collateralized Bitcoin. So the 1,000 turned to 500, to 500 to 250, 250 to 125, 125 into 60, and that'd probably be it, because you might hit $20 to $30 transaction fees on the Bitcoin network. So that is adding leverage, because now you have 3 to 4 open loans. Now you don't have to pay back on these loans, but each of those are subject to the 50% loan to value ratio. So if Bitcoin drops, you will need to come up with the collateral to recollateralize all of those loans. And remember, you only had $1,000, but now you've taken out or added in collateral of 15, 17, 50, 1875. So you got $875 extra dollars out of nowhere that you are responsible for should this shit the bed or turn sideways. So that is leverage. And again, it can make you a lot of money, because let's just say Bitcoin 2X's from there, from the 100,000 range you bought in, you now have that 0.01875 Bitcoin roughly. And that now turns into almost almost 4,000 Bitcoins, 3,600 Bitcoin, or $3,600 worth of Bitcoin, USDT terms. So that is a way to play this game, but not for the faint at heart. And you can definitely 1000x by putting leverage, and you can also get wiped out by putting leverage. So be careful with all of that for sure. But just wanted to break that down in case you had seen this video by Michael Saylor and explain those principles. I would say for the average person watching my content, sitting in the position that I'm in, is just buy Bitcoin. That is the best thing you can do. Apply the 5 laws of gold from the previous video of richest man in Babylon, and basically spend less than you earn, save at least 10% each month, put that 10% into Bitcoin, and then just keep stacking Bitcoin. And if you ever want to take some lifestyle chips off the table, I personally don't advise selling the Bitcoin, because I think it's a definitely thing you want to have forever. Then that's where you would take a loan and go take a vacation with the family or something like that, and then continue stacking sats and building up your collateral to pay back the loan if you want to pay it back, or as Michael Saylor said, don't pay it back ever. and keep that additional Bitcoin that you had and just use that Bitcoin collateral as those lifestyle chip opportunities. Because if it is indeed 13 million a coin in 20 years from now, yeah, every Bitcoin that you cannot stack right now is definitely going to cost you a tremendous amount of heartache in the future. Opportunity cost just lost. All right, that's all I got. Smash that HBO special, help a brother out, like, subscribe, comment down below. And until next time, lift daily and achieve your impossible. See ya.